Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, June the 6th, the year's 2023. Let's talk trading. Being greedy with Walmal. These videos are for educational purposes only. Your results may differ from mine and differ from Walmal. Walmal, we had talked last week about being greedy, and I had mentioned something about, how do we determine if we're being greedy or not? And I said, well, if you're trying to take more than what your trading plan specifies, that's when you're being greedy.
Yeah, I would agree with that. It's the type of thing, at least for me, and, every trade is different, and everybody's got to figure out you know, what their sweet spot is, in terms of how they're going to trade. But for me, when I go into a trade, I know where my stops are going to be. I know where my TPs are going to be, when I get into the trade. It's just, I just look at the chart and say, hey, we're going to run into problems here, and for me, I don't like problem areas because I don't like sitting in problem areas, and so I usually say, okay, I can go and I can get 4 pips, until I hit that problem area. Okay, I'm going to target to get 3 of them, and it's just a little bit of a buffer. That's generally how I go and look at, setting my TPs. And again, on the stop losses, for me anyway, it's easy because I just set a dollar amount, and I'm willing to lose X dollars on a trade, period. And I don't care how it lines up. I don't care if it lines up because you've averaged in. I don't care if it lines up because you've gone and stacked in, or whatever the mechanism is that if you're putting additional trades on. It doesn't make any difference. I'm willing to lose X dollars, and that's just how I go and look at it when I go and trade. And it makes it easy for me. And that's the thing for me. Make it easy. Doesn't make trading easy. It just makes the execution of it easy. And because otherwise, you get into all these games of with your brain and psychological games that you play. It's the type of thing where and I was guilty of this, just like probably many other people who may be watching this video. And that is that okay, I'm going to go long here. And I know I'm going to go long here because I know it's going to get, looking at today's chart, I know it's going to get to 24.25. Well, if you look over the last couple of hours, you can see that, no, that's not exactly what happened here. And what do? You just keep on moving your stop loss further and further down, and, because you're greedy. Because you can be greedy with taking profit. You can also be greedy that I'm going to go and get my money back, or I'm going to go and get to where my original TP was. And all I'm saying is you need to put in guardrails, and basically check yourself.
Yeah, definitely. And the other thing about greed is the old Harry hindsight, or as we would say, leaving pips on the table, or they brought out another big pot of shrimp after you exit the cafeteria line. And it's one of those mind games where maybe the best thing to do after a trade is just turn away from the screen for a couple of minutes and then reset.
Yeah, I would agree with that. And I think you can attest that I do that, where, it's very rare that you see me. I take a lot of trades in a day. There's no question about that. Typically, I take probably anywhere between 15 and 25 trades a day. But the thing is, very rarely will you see me take a trade, get out of a trade, with a loss or with a profit, and then immediately just jump right back in. Does it happen? Yeah, it happens sometimes, but it's a very rare event. And again, for me, that was a point for me that it was a great point for me, because in my early days, I used to do that all the time. And sometimes it worked out, but more times than not, it didn't, because I didn't have time to, get my brain wrapped around what's going on. I was still, I was still processing what I just went through, in the last trade. And, you called it, I think you've been calling it, trade fatigue, and it does happen. Your brain gets tired. Your brain is a muscle. And when you're in a trade or you're about to get into a trade, and your brain is actively working, and it should be working pretty hard, paying attention to all the different clues that you're seeing in the market. At least that's what it is for me. Now, set and forget type traders, they don't have to deal with that. They have a different way of trading, and they don't go through that and won't even understand that, and they'll say, I'm crazy, why are you even doing that? And they may be right, I don't know. But for me, because of the type of trading I'm doing, I'm very, very much focused in on the chart. In fact, here, I think you can attest to this, that there are times when I'm in a trade, and you'll start talking to me, and I don't even respond. And it's because it's not that I don't want to respond. It's just more of I'm just concentrating on what's going on so deeply that I don't have any leftover brain cells to respond.
You're no more bandwidth, huh?
Exactly. That's for me anyway. That's just part of how I go about it. And bringing it back to topic, it comes down to, okay, what are we going to put in place so that we're not greedy? Because for me anyway, greed usually, there was that famous movie, I forget the actual line, but greed is good.
Oh, Wall Street, Gordon Gecko. Greed is
exactly.
good, yeah.
And it is, but at the same time, being greedy is not. There's a difference between greed and being greedy, because there's a point where greed goes and gets you to go and pull the trigger, do what you need to do. Being greedy is when, okay, you've now seen what you expected to happen. You now see on the chart that everything that you thought was going to happen has happened, and everything you thought was going to happen into the future is starting to happen. And now you're saying, I want more. And instead of just going and saying, okay, we're going to go and cut it right here, we're going to take a win or take a loss, whatever it may be, we sit in there, and next thing you know, we turn a good trade into a bad trade, or worse than that, we turn a bad trade into a really bad trade.
Yeah, and part of it is, it's like, if you had gotten in, say, off the bottom and it ran up, somewhere when it was running up, it came back down. And a lot of times you'll want to get back what you could have had. And
Right.
sometimes what'll happen is you were up a pip or two, and then it goes against you, and now you want it back. And so, like I'm pointing to the screen right now, if you were back here at this area where it bounced off the double O, went up to about 2, and then it started coming back down. Actually, it went up to about 2 right here. And then it came back down. Then you want it back. Then it goes up more. Then it's coming down, and you want it back. And next thing you know, you're looking at being down 10 pips.
Yeah. Yeah, and I was in a trade a few minutes ago before we did this video, and I had gone in at somewhere around 93 or so, and then it went up, to got as high as 97. Now I was targeting 05, so that was fine for me. I didn't get out. I let it run back down, and I went in a second time when it bounced off that same level again. And here's the thing about greed, is that my target, okay, was actually at what, let me go back to the chart and look. My target was at 4.0, so 2404.0, okay, and it hit it. And I even said to you, I need to get out here.
Yeah.
But am I being greedy? And next thing you know, it bounced off that thing, and it eventually did get above that. But the thing is, it ran down, and I wound up getting out because I saw this thing really starting to turn, like it was going to turn all the way back down, and I wound up giving back, 3-4 pips times 2, because of that. Now my greed cost me, And the thing is, by looking at the chart, why did I originally set up my TP at that spot? Because if you look left, it's obvious it was going to hit a ceiling there, and it was going to have problems. And why are you going to, sort of like, why are you trying to catch the falling knife? Why are you trying to go and, be the one that's on the bleeding edge or something, and get yourself into all types of trouble? It just, to me, it just seems foolish. And yet, I say this, and I'm saying this, guys, I'm saying this more to myself than to anybody else. Because between everything, just recently, in the last half hour, I went and cost myself, 6 to 8 pips because I didn't get out where I originally had placed my TP at. I moved my TP further up, I physically dragged them on the chart. And it's like, you foolish person.
Yeah. Yeah. And the other thing is, it's like, I was in a couple of trades today where I got in, and next thing you know, there's a one ball. And I have it's a new phrase or mantra or whatever you want to call it, rule of thumb. One ball's bounce and, two balls push through. And so what happened was, I wasn't in a trade and it had pushed the one ball and it just kept pushing. See, as you can see right now on the chart, how this two ball is pushing. So if a one ball becomes a two ball, that's when I want to stay in. But, what would happen is like right here, it was a one ball, and then let's just say I'd gotten in that trade, this flip-flop trade, I would have been up like maybe a pip or something. And as soon as I see that one ball, I need to get out. Because, it could have turned into a two ball, but the point is, more often than not, it doesn't. And you can see right here, it would have pushed down and, just because of the way the market's moving, price just pushed down. I would have probably, been frustrated. And then here it goes the other way. Now we got a one ball, and you see how it just snapped back again? That's what I'm talking about.
Right.
It just does that.
One little chart.
Yeah.
The thing is, a lot of it's predictable because look where it snapped back at about 13.7. I'm sorry, no, I'm wrong. 97.2. It snapped back right around that area. Well, looking to the left. Look at all the trouble to the left in the last hour. The typical example of, resistance turns into support. Well, what did it do? It turned into support and it bounced it. So if you were looking to go short, you should have been short way up at, I don't know, somewhere around
01.
Yeah, something like that, and then you could have, and you set your TP, down at 97.8, 0.9, something like that, because you're going to run into problems there. And the problem is we become greedy. It's like, oh, look at that big candle. Look at the momentum of that candle. That's going to definitely push through. Morning, wrong.
Yeah.
And take what you can get. Now somebody said, well, you went and sat through. You just said you sat through that trade where it ran all the way back down. I said, yeah, and the reason why is because when I looked at the chart, there was no reason for that thing to turn there, other than the fact it just ran out of momentum and it needed to catch its breath. And it wasn't like it was hitting the ceiling of some sort, and that's why I stayed in the trade.
Right.
So I was willing to go, and call it foolish or whatever, I don't know. But the thing is, I was, up to 4 or 5 pips, and, I could have cleared the 4 or 5 pips off the table and, and then gone in a second time, when it went down there. That would have been another way to go and address it. And to be honest with you, that's normally how I do address it. But today I did it differently.
Yeah. Yeah. So, fellow traders, the fastest 15 minutes in trading's almost up. So, the takeaway is, if you've got a trading plan and a money management scheme, and it tells you should be taking profit, then take your profit there. Because if you don't, you're being greedy. And always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.